Hello and welcome to this session on analyzing any instrument using Neotrader. My name is Dr. CK Narayan and I am the designer of Neotrader software, which many of you have been using for a while. And today I am going to take you through an aspect. Many of you have seen how you can get trading ideas out of Neotrader on an ongoing basis, be it for intraday trades, multi-day or positional or even investment. Today I am going to show you another powerful feature of Neotrader, the #1 software for trading and analysis. And what I am going to do is show you how you can analyze the Nifty without the use of a chart. We can go to the chart at the end just to confirm our analysis, but what I want to bring to your attention here is that Neotrader packs enough analysis material which is all processed and ready for you to use, so that you can simply look at Neotrader ready-made analysis which is made available to you, and then you can arrive at a conclusion of whether that instrument is a buy or a sell, and if so, where could it be bought or sold, what should be the significant points for support and resistance and targets and stop losses, etc. So without much further ado, let's dive into the Nifty. What you see here on the screen is your stock analyzer. Like everybody knows, if you click stock analyzer, you will be taken to this particular screen, and in this screen you can see it's defaulted for Nifty. And the first thing that I want to call to attention, see in the stock analyzer page, let me just take you to a PPT here wherein I can show you what all is in store for us today. Now if you go to the stock analyzer page, you have it divided into several sections. Now each of these sections can be used by you for analyzing that particular instrument. In this today's case, the Nifty. There is sections A through G that I have marked. I'll go into each sections individually. Section A shows percentage changes and conclusions associated with that, and section B shows Ichimoku levels. Now here is where you will see section A. This is your entire percentage changes, and this is your Ichimoku levels, right? So that is what I want you to see in section A. We will see section C to G as we move along. Now coming to section A and B. Now this is your screenshot from the stock analyzer page. At the top you can see the days change, weekly change, monthly change, and year to date change. Now in the case of Nifty, we find that year to date, that means from January till end of March and into the first week of April, the Nifty has already lost 33.38%. And see, the monthly and weekly changes here will be something similar because we've just completed about a week. The weekly change is a little more because 31st was the Monday, and that day's change is also included in the weekly change. But the monthly change is showing you from Tuesday through Friday. So 5.7 and 6.3%, that it's pretty large amount of fall for a week. Even Friday's change was at minus 1.78. So it's very, very clear that the Nifty has been under considerable pressure. Now how considerable is this pressure? That we can note from the second line, which is the Ichimoku readings which have been put here. Now you have to remember the Ichimoku readings will show you the TSKS lines, which are the short and medium term lines, the cloud levels, which is your Senku span A and B, and the lagging line, which is your Chiku span level. So these are the 5 main important lines in the Ichimoku systems, and all of them will tell us what the situation is, as those who are aware of Ichimoku will be aware already. Now what is vital here is for you to check out the 3 time frames that we have at the top. We have an intraday time frame, a multi-day time frame, and a positional or a multi-week time frame here, right? And you can also see all of them together if you choose the consolidated view, right? So what I have on here is the multi-day. In the multi-day, the Ichimoku readings will be with respect to the daily readings of the Ichimoku levels, right? So let's go and see what the daily readings are saying. We have the first set of information saying that the Nifty is under considerable pressure. Now, how much of a pressure is it? The CS line, the Chiku span level will always indicate the last price of the Nifty, right? So, Nifty's last traded value was 8106, right? So, you can see that this 8106 is considerably below the cloud levels. The cloud level is Senku span A and Senku span B. Now look at those levels on the daily chart, 11,978 and 12,022, which means that the prices, current prices, are sharply below or significantly below the cloud. So therefore this is confirming the very sharply bearish status of the Nifty, something which is not going to get changed in a hurry. Then we come to the short term and the medium term line. Tenkan Sen is the 9-day period line and Kijun Sen is the 26-day period line, right? So if you look at it, the current prices are below the Tenkan Sen also. That means it is even below the short-term price line. The short-term price line by itself is below the medium-term price line. And both these, the Tenkan and the Kijun line, are well below the cloud as well. And you can note that the Chiku span is also below the Tenkan, it is below the cloud, it's everywhere. So the Ichimoku setup on the daily time frame is clearly reconfirming the acute bearish status of the market. So when you look at the top section A and B of stock analyzer page, you will get an idea of how to view or how to arrive at a perspective about where the index is or where that instrument you are analyzing is placed. After this, we can go to the next section. The next section is section C, and section C, you can see to the right hand side you will have this something called the score. The score features candlestick scores, Ichimoku scores, and a pivot range, right? Now if you see here, it shows these, and again this is time sensitive, meaning if you choose intraday, the scores will be with respect to intraday. Multi-day, it will show you the daily scores. If you take positional, it will show you the weekly scores. What is important here is to see what is the kind of scores you have and whether they are negative. If the candlestick score is negative, it will show in minus, right? Here it is showing 0. I'll have to just check that. There seem to be possibly error, or maybe it was a series of dojis which reduce the candlestick score. But you can see the Ichimoku bear score is 91. All scores out of a possible maximum score of 100. So 91 is the Ichimoku bear score, telling us that the market is indeed quite bearish. So section C is another way of confirming or negating whatever is being shown by the percentages and the Ichimoku levels, right? So that is section C for you. One more signal that the index is quite bearish. So let's move on to section D. Section D, which you can see below the if you just scroll down here, you will come to technical indicators. There are other sections, I'll come to them later. Section D is technical indicators, and this is the one we should be taking a look at next, because technical indicators will tell you how much oversold or how much overbought you are, whether there is any danger of the stock or the index being completely oversold and therefore liable for a turnaround, or there is some sort of a mixed picture across different oscillators. Under the technical indicators, you can see that there are multiple oscillators features: ADX, plus minus DI, MACD, Bollinger Band, up, middle and low, RSI and stochastic K line and the D line. So you have all these indicators under technical indicators, and again these are going to be time sensitive. These are with respect to the time frame that you choose. If you choose intraday, all the technical indicator levels will be as per intraday, and if you choose it as per daily, it will come that way. If you choose positional, it will be weekly indicators. What we have on here let's go and take a look at what the Nifty indicators are saying on the daily format. On the daily, the ADX is now showing a level of around 55. You see this 55? The value of ADX is 55. Now ADX, for those who are aware, 55 ADX value is a very, very high ADX value. It is indicating that the trend run has been excessive. Now we already know that it is in a confirmed very, very strong downtrend, because we saw the percentages, we saw the Ichimoku, we saw the bear score at 91, and now we are getting further confirmation that we are into a deep oversold status, because the ADX is already at 55.73. Similarly, you find that the minus DI is also quite high. When DI levels go past 40, 45, or the ADX level goes well past 45 to 50, you are into an oversold status. Likewise, you are seeing MACD at a very deep level, minus 782. You are seeing that the Bollinger Bands, the mid band and the upper bands, are both quite far away from the current prices. The current prices, if you recall, was 8,106, right? So these are far away. So you are trading between the mid band and the lower band here, right? So they are quite far away, and therefore market is not going to turn bullish in a hurry. Even the RSI is into oversold zone here, as can be seen. And if you look at the stochastic, there seems to be a little bit of repair as far as the stochastic is concerned, because look at slow D. Slow D is at 43, whereas slow K is at 26. So this is the faster line, this is the trailing line. So the faster line has gone and reached 26, that is deep oversold, and now we have to await some reversal. If the slow D had also been below 30 or below 20, then you could have certainly said that this is deep oversold. So what this section D is indicating, that the most notable value here is your ADX value, which is saying that you are liable for some kind of reversal here. However, the far distances of the mid Bollinger Band and the up Bollinger Band are indicating that at best you may only have a rally. So these kind of information comes up from section D, which is your technical indicator area. So now let's go on to the next section and then see what that has to offer. And then if you see section E contains the dials. There are dials on the top, which you have seen in your stock analyzer page. Now there are two sets of dials. One is a momentum indicator dial and one is a trend exhaustion dial. Now in your various webinars, you have already been told how to look at these dials. So I will not spend time in explaining the dials. I'll go right away into what they are indicating. At the bottom of the screen here, I have taken the consolidated view so that you are seeing the intraday, the multi-day and the positional, all the dials. These are the momentum dials and these are the momentum reversal dials possibilities. Here if you notice, allow me to just erase all these because they might be coming in the way of what you are seeing or the point that we are about to make. So if you look at the situation now, then you will find that you have intraday dials pointing towards reaching oversold, and even on the multi-day, that is the daily levels, are also starting now to trend towards the oversold. It's only the weekly that is also tending towards the oversold. So momentum is definitely getting to the overdone area, which we also saw in the momentum indicators. Now as these dials go towards this end, it will tell you that there is a possibility of reversal. So you can see that intraday and multi-day are now on the verge of getting into the area where it might indicate to us some reversal of momentum, but that is still not the case as far as the positional is concerned. So like I said, the dials indicate for current momentum and potential for reversal, and they are also time sensitive. If you choose intraday, it will show you only these two, or multi-day or positional one by one, it will show you only two dials. But if you choose the consolidated view, it will show you all 6 of them at one go. So the dials are a good way of knowing whether you are reconfirming the evidence that we have already got from percentages, Ichimoku, the scores, the technical indicators. So it's all built in as a way of confirming and reconfirming what we have already, right? So that is section E. Let's go on to section F. Now section F shows you what are the active trades, open trades. Now this is from the algo part of Neotrader. Now Neotrader, as you all know, generates algo based trades. We have about 15-16 trading algos which we have built in, which are well vetted by filtration algos. I got 5 levels of filtration, so what comes out of it is something very, very filtered. So now what I want you to pay attention here is something which is a little interesting. What you have here is that you got short trades being indicated in all the time frames as far as swing trading is concerned. Now swing dash 1 is a method which is more of a trend following method. So in trend following, whether you are looking at intraday time frame, multi-day time frame or positional, you are into a short trade. You also have momentum on the intraday trade showing you a short position. So that means the currently whatever trades are open as per the algos tracking the Nifty within Neotrader, they are all on the short side. Now what Neotrader also puts up is something more interesting. What it does is also show you something which is 3 types of reversal trades. And now if you look here, there is reversal 2. These are all different reversal methods. Now reversal 2, this generally happens when the movement is overstretched in one direction, right? We already saw that the ADX is at 55 and that is indicating that there could be a possibility of a reversal. And when you come here and see that reversal trades are indicating long, see, reversal will always be against whatever ongoing trades are there. These are trend following and these are momentum. Momentum also will be inherently trend following because it will look for momentum in the direction of the trend. So reversal trades will be against the trend, and here is confirmation that the momentum reversal signals that you saw in section D are also getting confirmed here based on reversal 2, which is one of the reversal algorithms which is running. It is indicating that in intraday time frame as well as in multi-day time frame, Nifty is reaching a point where reversal signals are possible. So this is where you have additional information coming in from Neotrader which tells you what are the correct signals to look. See, the problem when you look at charts is that you keep going all over the place. What Neotrader has done is taken all those elements, converted them into a processing engine, run them through a processing engine, and it gives out only those relevant pieces of information which you can use directly to arrive at a conclusion. Now the whole point in any analysis is what do we conclude, and in this case we can conclude from here that while the short term and the trend following systems are in a negative mode and they have short trades open, now these are getting a little overstretched, particularly in the intraday as well as the daily time frame. So there is a potential here for reversal, and that is a kind of an alert to you about how you should be looking at the Nifty. So let's move on to section G, which is a vital place, and this is where we have all the pivots. Now here I must tell you that these are Fibonacci pivots which have been designed and put on. So right in the center you have the pivots, and then you got 4 levels of resistance and 4 levels of support. And this is pivots using the consolidated view, so you get all the 3 time periods. When you want to look at clusters, when you want to find nests of supports or nesting of resistance level, you should choose consolidated view, and this is what you will get. So let's go out here and see what do we have. What we have here are 2 levels, 8215 and 8280. So these is one kind of nesting which says that on an intraday basis and on a multi-day basis, unless the prices are able to get above 8200 or 8280, the market cannot turn bullish. So that is something immediately we know where is the market going to turn bullish. If it does, then you have the levels which are above, right, to find for as a kind of a cluster of resistance. If you go ahead and find for a cluster of resistance, you got 8644 intraday and you got 8664 as multi-day. Right here you have them at much higher levels because the pivot itself is so much higher. So this is the two levels of resistance, and if you recall, in the last week the market went slightly above these levels and then has retreated and has now finished below these levels. Right, it is now below these pivot levels. It is in fact now below even the 8,000 levels by the end of that day, and in the SGX over the weekend it is trading even lower. So it doesn't seem like the market is going to turn bullish early during the next week. What it will have to do is deal with these support levels which are there, and that is what we should be paying our attention to. So if you take a look here, first up you get this 7868 which is coming, sorry, that is 7688, I'm sorry, my eyesight is not what it used to be. It is 7668, so that's a little further down. So let's go and see. We have other levels here coming up, 7950, 7787, etc. So you got 7950 and you got 7895. That's one range that you can look at, and then you got 7658 and you got 7668. So these two levels are coordinating here for some sort of nesting. So you can think of that as a possible area that the market could hit. Before that there may be a slight temporary rest here, so you can use your other technical methods to find out whether the market will stop here. But the main point is that unless the market can exceed going above this level, it might be very, very difficult for the Nifty to start moving up beyond. Right, so using Neotrader this way, you come to a conclusion that using the various sections that you have, you can what Neotrader can help you do is know how the stock has been performing across different time frames. Right, we saw that in section A and section B. Know the trends in different time frames. So we saw how those trends could be differentiated by looking at the Ichimoku in section B. Now you looked at the scores also in section C. Know how strong or weak those trends are in those relevant time frames. We looked at the technical indicators in section D, and then we went on to section E to see what trades are already flashed by the algos that are running in the background in the program. Now this is a very, very useful piece of information, because you may be prisoner of many biases, you may be prisoner of many fears that you may harbor within you, but the algo does not harbor any such biases or any such fears. It will only show you whatever is relevant and whatever is the actual fact. So therefore you must always pay attention to section E, and that will tell you how to look. Right, so section E says it will show you what are the trades already flashed and whether or not there are reversal signals which are present, which in today's case we certainly saw that there were some reversal signals which were pleasant. And then we looked at section G to know how to plan things ahead. Right, using the pivot tables, we could look at where the market can turn bullish, if at all, where will they turn bearish, below what level. S1 levels were at around 8,000, and we have already seen, like here, if you go back, S1 levels were around 8,000, 40, 50, and the SGX Nifty already seems to be trading beneath that. So you know how to judge the market even before it opens, and what are those levels which are critical for the market to sustain or move above or below. After doing all this, you can come up with the targets, you can come up with the trigger levels for entering into a trade, you can find out where to set the stops, etc. After doing all this, you can then go to your chart just to firm up the opinion already formed. Now this is the most important thing that I want to stress here. Neotrader cuts the clutter, right? Neotrader gives you processed information. This enables you to go directly to what is relevant rather than aimlessly go around in the chart adding one oscillator here, one average there, one trend line here, one channel there, getting psyched out by some candle patterns, and you suddenly switch to Aikanashi, and then you want to go to Renko, Kagi, and so on and so forth. A chart is an extremely useful thing, but provided you know how to use it very, very well. If you combine Neotrader, which is the #1 analysis and trading platform that you can lay your hands on, you will be able to do your job significantly better. I trust that will help you to do your analysis much better in coming days. I trust this will help you to use your Neotrader platform much better. Thank you very much for being with me on this, and I trust you will be having greatly profitable outings into the future using Neotrader. Thank you very much for joining again. This is Dr. CK Narayan signing off for now. Thank you so much for joining us once again.